Hey traders, happy Monday. Welcome to the Weekly Outlook. This is Chris Pulver. Let's talk about all things stocks, forex, cryptos. This is the week of November 30th. We're going to officially wrap up the month today and be trading through December 4th on Friday. There will be some non-farm payroll numbers as well as Canada employment on Friday. We have some other important news to digest. We have holiday trading that is upon us. Let's talk about the charts. Let's see where things are going. Seems like it is easier for the market to just keep this party started. However, keep an eye on the SPY, the DIA, the QQQ, and see where things are going on the major U.S. indices. But cryptocurrencies are rallying. We have a new high again on Bitcoin this morning as of Monday. We're looking for that 20K high to see what happens. Is it going to hit the wall at 20K, or is it going to break through that barrier from 2018? We'll find out. But pretty exciting stuff. Let's take a look at the currency strength chart. We'll look at our news this week. We'll get into the charts. I'll show you what pairs and stocks I'm looking at. Big merge today that I just found out about. I just closed out for about 120% gains on one of my stocks, which is pretty fun. Taking some holiday cash, and let's see if our cryptocurrency portfolio really takes off. So I'm going to go ahead and park my face down here. So we're about to dive into charts. Before we do, please take a moment to read the risk disclaimer. Understand there's risk in trading. Please and always use trade capital only. Do not trade with money you cannot afford to lose. If you're following me out there on social media, the best way to follow me, get my free education on videos like this, like the Weekly Outlook, as well as my best trading strategies, keep it seriously simple video series that is subscribed to this YouTube channel. So this video, click that thumbs up. I appreciate all the likes. Click the subscribe and notification bell so when videos like this premiere, you'll be notified on your smartphone with those push notifications. I also am linking my YouTube channel to my Facebook page as well as Twitter and Instagram. But again, all things are leading to this YouTube channel. That's where I'm getting all the free education. All right. And again, feel free to share with everybody out there you think could benefit from free trading and investing education. Hope it helps. Alrighty, so let's go into the news first for this week. We'll take a look at the high impact news announcements. Also, just to recap and see where things are at from last week, we will go to, let's do a couple of things. So first off, last week, the Dow Jones was up 2.21%, the S&P was up 2.25%, the Nasdaq was up 2.96%, and Bitcoin just off of the 19,000 plus highs ended up dropping around 9%. Bitcoin ended up finishing around 17,000 last week. But here we are a few days later, Monday's kickoff, we're at $19,600 on Bitcoin and looking to see if we have another rally in store for that 20,000K mark. Here is Bitcoin right here. So BTC USD. We had our high around 19.5, just shy of 19.5. We dropped all the way back down to 16.1. And then you can see that we are surging again today. So this is essentially weekend trading for cryptocurrencies. This is Monday. This is Sunday. This is Saturday. Cryptocurrencies trade 24/7. So it looks like the weekend rally is trying to push up towards that $20,000 mark. We will see what it gives us. Are we going to blow right through it, or are we going to reject off of it? That is the big question mark. I certainly would not complain if this rally goes through 20,000, and this also carries with it the other cryptocurrencies like Ethereum making some new highs at 623. Will we get back to the 2018 highs all the way back up here around $1,400? How about Litecoin? Litecoin 2018 highs around 374, currently trading below the $100 mark. So lots of upside still available on a lot of these cryptocurrencies. Ripple had a pretty exciting week last week. Look at that, just an amazing run. I've been talking bullish all year about Ripple, especially with a really nice inverse head and shoulders pattern that we've been kind of laying out. So there was our high, there was our high. We looked at this as a head and shoulders pattern, and we just had this huge surge right through that neckline. Now, this pattern is technically fulfilled, but if we have wave 1, 2, wave 3, if we have a pullback here, we are looking for a fifth wave move. So we should be able to see Ripple get up into the dollar plus area. What's going to be interesting is, do we hit a dollar? You know, this would be roughly May of 2018. Do we have some levels here around a dollar and all the way back down here around 20 cents? Are we going to see some range trading on these cryptocurrencies, or are we going to enter into kind of another euphoric phase like we saw back in 2017 and 18? That remains to be seen. But you know, look, every day you're going to see enthusiasts that are saying, you know, you're crazy for missing out on cryptocurrencies, and you're going to see haters that are like, you're foolish for even thinking about getting into cryptocurrencies. Now, I don't care what party you're a part of. I don't care what side you're on. I've talked about this for the last couple of years. I have a finite portfolio when it comes to cryptocurrencies. I'm willing to basically say, you know what, if it turns to zero and it's the world's biggest bubble, that's really disappointing. But if this gets really exciting, where cryptos are heading back towards, like Bitcoin, for example, if we are heading back towards the 2017 high before everything started to crash back down and settle back in. This is what's going to be interesting. Are we hitting the highs and stopping there? Or are we hitting the highs and blowing through it? That's what we're trying to figure out. And if Bitcoin is going to blow through 20,000, I would imagine that it's fairly simple for the other cryptocurrencies to play catch up. So Ethereum still has a lot of upside potential just to get back to the 2018 high. Okay, same thing with Litecoin, same thing with Ripple. There is a lot of room, XRP, there's a lot of room to the upside. I mean, if Ripple, we're at 63 cents on Ripple. If we get to the $3 mark, bring it on. So that's what's exciting if Bitcoin can blow through that $20,000 area. If it doesn't and it stalls and it hits 20K and starts to drop again, that's fine. I mean, right now the fair market is around between like 11,000 and 13,000 when it comes to mining Bitcoin. So it would make sense that this kind of overstretched rally, this overbought rally, would come back and find some type of fair market value, and we'll see. But there's also a lot of momentum behind this. There's a lot of the missing out that's been happening where more money's getting pumped into it. So trade accordingly. Don't chase. Don't be crazy. But it's certainly going to be an interesting ride. Meanwhile, we take a look at the major U.S. indices like the SPY. Where are we? Look at this daily chart. Have we made a break? If you've been following me for the last couple of weeks, have we made a break above or below? This is the post-election gap. We're not above it. Okay, how about this? Here's my little watch list. Are we above the DIA? No, we're not. In fact, I just had a chart alarm go off this morning that we are filling the gap. Okay, are we filling this gap? Right here, we did, right? So we had our post-election gap, lots of indecision. We cracked that 30,000 mark on the Dow Jones for the first time ever, and we are giving some of it back. Now, I'm still watching. Is this the perfect time for a top to form and our indices are going to be coming back down? Or is this just more indecision to keep this thing going? This is an absolutely critical spot. And I certainly feel like a broken record, sound like a broken record, because I've talked about this, since we had our election run and our post-election gap. I said this is the next critical spot. We have to get some more clarification on this price action. Okay, now this doesn't mean that there's nothing to trade. There are certainly instruments out there. There are stocks moving like crazy. And again, we want to trade accordingly. But as far as the overall sentiment and the overall big direction, we're sitting at 12-year highs. We're sitting at new historical highs. We cracked the $30,000 mark. Is it a profit taking for the end of the year? Maybe. Okay, Benji wants to say hi. Give me a second. Come here. All right. Partner in crime right here. All right, so there's the DIA that follows the Dow Jones. How about the QQQ? That's the ETF that follows the NASDAQ. We are at 296, just off the 300 handle. Again, September swing from high to low. NASDAQ following tech. Where are we going? We haven't cracked the highs. Okay, could we see tech still bring us up? Retail shopping is probably going to be the way to see consumerism this holiday season. I was reading that, brick and mortar and foot traffic was down a ton this year, like 50% during the holiday from Thanksgiving to Black Friday to now Cyber Monday. Foot traffic was down like 50% but online sales were up across the board. So I think the market's trying to look at this as there's a lot of optimism. We have the backdrop from the Fed. We have super low interest rates. We're encouraging lending, encouraging borrowing, encouraging spending. Now the question is, to spend, will we have another round of stimulus coming with coronavirus vaccine optimism? Also in the catch-22 of we have vaccine optimism, but we have crazy high cases. And that's where we're starting to see a lot of that indecision coming into the markets. I've been saying this for the last couple of weeks. So for me, my big kind of sentiment decision is going to be based on where does the SPY go, where does the DIA go, and where does the QQQ go. Now take a look at the VIX. The VIX is off of these major support levels at $20. I wouldn't be surprised if the VIX, and this could be an interesting week to do it, we could see the VIX rally. I am long VIXY. I am long VXX. I'm also looking into gold and silver. Take a look at this. This is finally a great time to be looking to get long on gold. Now look, I am not just going to buy some random level, but I've been talking about this 1800 to 1750 area for quite a while. So if you are interested, I think that this has the signs of a pretty good looking correction. I'll go ahead and take that line there and copy it. There we go. So if we have a correction that is soon hitting some lows, look left on your chart, some really good structure here around 1750. All right, so if you're interested in maybe testing the waters around 1750, we're not that far off of it. If you're not looking for that type of precision, you could take a small level here, look for some more confirmation on the bottom of this channel, and see if gold wants to bounce back up into this channel. It'll be interesting. High to low, lower high to lower low. If we hit the symmetry level, I wouldn't be surprised if we see some bouncing coming on gold. Also looking at silver, XAGUSD. Same thing. I can take a corrective move here and clone that line. And there we go. So silver could have some more downward movement. I did take a small trade on SLV last week that is following silver, so SLV. I did buy this right around $21. So it's just a few, cents upside down. If it drops a little bit lower, I'm looking to add more to it around $18.50. But I wanted to have something to participate in because I do think that silver has some nice levels higher. And if we go back to 2011, this is what I was interested in seeing is if we had something like this. We have this low to high swing. We end up creating a higher low in here, and we have another push to the upside where silver can ultimately come back into those $30 and $40 plus levels, getting very, very close to 50 bucks. So if I'm in at 20 and we can get price into the 40s, I will be very happy overall with investing in silver. So I like silver just because it's cheaper. I like silver because historically there's still highs at $50. If you look at gold on the other hand, gold is at historical highs. There's 2070. If we go back to a weekly chart, we had those highs earlier back in 2011, but gold actually just topped. Now, I'm not saying that gold is done going higher. With a softer US dollar, with crazy dovish central banks around the world, tangible, real value, intrinsic value with gold is seen as a solid hedge. In addition to being, risk on. That's what's so crazy about some of the correlations in 2020 is you have this, risk off hedge like being in gold. Some are even saying now that cryptocurrencies are seen as a hedge. Meanwhile, you have fiat currencies and central banks that are dovish. The dollar's weaker. Most currency pairs are racing back to the bottom again with interest rates at near zero or negative interest rates like Japan and Europe. 0.1%, 0% for the US, 0.1%, 0.25, super, super low interest rates. So with the currency world not offering yield, it is asking investors to park money in riskier assets, i.e. equities. So that's why we're starting to still see this just participation, this drift, this ongoing, no news, good news, bad news. It's still just kind of pushing price up in the overall indices. It's looking for risk appetite in any environment. And so at the same time, you see this risk on trading, like the stock markets continue to surge. They don't want to drop. They don't want to crash, right? Although you see gold, I think that gold's going to have some steady kind of hedge plays once again. Silver, the same thing, and cryptocurrencies as well, as kind of a play against low interest, low yield currencies, and also a play against potential high volatility ahead. And that's another thing I continue to stay long on and I stay bullish on is volatility. The fear gauge right here, the VIX. If we settle back into these $12 and $13, I'm just going to hold positions and have this thing shoot up towards 40 bucks. In the next probably 1 to 3 months, we're going to see another big surge on volatility. Like I said, it may be something over the next couple of weeks because we have this fantastic pocket around $35 and range highs that were pre-election right around 41. So if we go from 20 to 40, there's a 100% move in the VIX. Again, that's not going to necessarily crash the stock market. That could be a daily sell-off. That could be like a sour week in the markets. That could see higher volatility, but it quickly gets squashed back down. Vaccines are supposed to be rolled out in some capacity the middle of December. As far as logistics for full distribution, it's basically been a bid war. I know that Europe has procured like billions of doses. Canada, billions of doses. I think with the Moderna vaccine, that requires 2 doses within 28 days. And then there's the dilemma of who gets it. It should be going to essential workers, frontline workers, elderly, assisted living facilities. Those who need it should be getting it. And then, someone like I would say myself, I'm pretty healthy. I've been socially distanced most of the year. I work from home. I would be on like the last end of the you need it. But obviously, when it's readily available, then all is good. So this gets back to the technicals. Let's focus on where these US indices are going. Can they break higher? Is the market using, did it already kind of price in its vaccine hopes? If it did, then we're going to have a hard time breaking these highs. Santa Claus rally or not, maybe we're calling this kind of the early post-election rally, and we priced in positivity on COVID vaccine. Maybe that's all there is. We still have earnings to report for this week and for the rest of the season. But it's again, there's a lot of things to take in. There's a lot of things to digest. I still think overall sentiment is going to be hurt if we can't see price break higher. So if the SPY can't break higher of this post-election gap, if the Dow Jones can't break higher than 30K, we keep bumping off that level and dropping. If the NASDAQ can't regain those September highs, you have to watch these cycles. You have to watch and see where does that price go in the indices? How does that drag everything with it? There are companies I still want to buy. In fact, I was actually searching this morning to see how my Kensington Capital was doing, and there's no symbol. And it turns out that there was an acquisition right here, QuantumScape Corp. Look at this crazy price. So I was in Kensington Capital around $13, and this was basically an acquisition with QS, or at least this is what the ticker is now. Let me see what I have. I had a message here from Robinhood. Message Kensington Capital. So we have, Kensington Capital Acquisition Corp, which is KCAC, performed a name change and ticker change to QuantumScape Corp. Now, what kind of sucks is because of this name change, I had a fill on KCAC right around, I'm trying to think where it was. I had 2 levels to buy this. I bought it at $13 and change, and I believe I put in a limit buy around this gap around $15, and I didn't get filled. We had the name change. However, between $13 and change all the way up to $53, that is a massive, massive gain. So I ended up closing this out for around 130% profit, which I'm fine with, and I'm looking to get back in. Now, if we have a pullback, I'm taking some of that partial position, closing out for profit. I'm letting the remainder run, and I'm going to add more to it at this pullback level. If we get back to, say, $25, $26, if we come back in and fill this gap, I'm looking for a higher low to form and see if I can get now QuantumScape to the upside. But a nice little surprise for the day to open up and see, and I was like, where the heck is my KCAC? But here it is, it's QS, and close out for a huge win. Now I'm looking to get back in around $25 and $26. I'm also long on DraftKings. DraftKings, there it is, DKNG. I'm long on DraftKings. I've been long since this turn around $38. And that's currently up to around 50 and change. Let's see if we can retake some of these highs. Even with holidays, we're still going to have sports. We have college sports going. College basketball's underway. NFL's still kicking. I know that the NBA season's about to start back up. Golf is still in, at the end of their FedEx season and whatnot. We just had the Masters in November. But we still have betting, right? I mean, betting now is more legal than ever before. Sportsbook all over these states are opening up, and I think DraftKings could be a big beneficiary of that. So, again, just like anything else, I think it has a solid business model. There's also a huge deal that went through with ESPN and DraftKings. So I'm looking at kind of getting in on somewhat of the ground levels. Give this, the next 12 to 24 months and see where DraftKings goes. But hopefully this is something that can reach $100 plus. Anything else that's new from me? I did buy some. I bought some SLV last week. I added to a couple of positions. I bought it right around $21. I added some more Amazon. I added some Alibaba. Yes. Okay, I added some Alibaba. That's BABA. So what I'm looking at here, traders, everyone watching, is I'm just trying to buy some really strong companies that have competitive advantages. And, this, as Warren Buffett called it, like the moat, right? Like if you have this protected fortress and nobody can penetrate. Amazon is borderline, like everyone's catching up to Amazon. Everyone's trying to tap into what Amazon does logistically, their market share, their presence out there, their e-commerce footprint. Very difficult business model to compete with, but Amazon is killing it. Alibaba is essentially the Asia version of Google. So I like good companies at great prices. We've had a bit of a turn on Alibaba, so I was looking to buy those dips. Same thing on Amazon. We've had some sideways movement on Amazon, so I am buying these lows. I think we have some amazing levels. This looks very similar to the NASDAQ. We had the September high to low. We're trading a lot inside there. But look, if we come back into, let's say that Amazon falls with the stock market. Let's say the stock market has a bit of a slide. I'm still going to buy Amazon at $2,500. I'm still going to buy Amazon at $2,000. I'm still going to buy Amazon at $1,500. I would buy multiple levels of Amazon and ultimately think that this company is going to be worth more than $3,500. And I know that it's trading way above PE ratios, but it always has. It's always had a higher PE ratio, just because it tends to be an expensive stock. But there are ways that brokers now allow you to trade fractional shares, so you don't have to have $3,000 just to buy one share of Amazon. If you've got $500, $100, you can buy fractional shares of Amazon. Okay, so good companies, regardless of market cycle, good companies that are borderline bulletproof, right? Recession proof. If we see a big dip in the stock market and a big slide, I want to be buying great companies on sale. I'm not interested in flash in the pan companies. I'm not interested in buying Hertz at bankruptcies and JCPenney at bankruptcies. Like that to me is not logical, rational trading. I want to just buy great, strong, competitively advantaged companies at good prices. All right. Currency wise, things are really just pretty steady. I have a robot that keeps making me a lot of solid profits during this indecision time. The currency that's doing very well right now is actually a New Zealand dollar. We have some risk on trading. It looks something like this. We have the pound had some strength. There's going to be some more Brexit drama coming over the next 2 to 3 weeks. I believe there's, and I keep saying this, like, is there a hard deadline in Brexit? That keeps getting talked about. The trade terms are coming to an end. I don't know what's going to happen between the UK and the European Union. This Brexit stuff has been going on since summer of 2016. Okay, we're 4 years into this, and we're still uncertain. So I don't really know what the end game is for the UK or for the European Union, but I do know that the pound is probably going to have some wild and crazy movement over the next couple of weeks. Just be prepared for that. All right. So if you're watching something like this currency strength chart, we're probably going to see some higher volatility coming out of the pound crosses. Okay. The New Zealand has been a very strong basket recently, and it will probably continue to do so. OPEC with meetings yesterday and today look to see what the CAD does. I am short New Zealand CAD. I actually just took 100 pips of profit on the Aussie CAD this morning with a robot. We talked about this last week in one of my other YouTube sessions. The short on the dollar CAD, if we crack below 1.30, it's now 70 pips below. So if you took a sell trade right below that 1.30 level on dollar CAD, you're making some decent pips on that. And again, oil has been pretty firm. So if we take a look at oil really quickly, oil is still staying somewhat strong above this resistance. We had breaks here around $44. I believe that there's room of on oil to go up towards $50. So if you look left on oil right over here, lots of previous support at $50 and change. Go down to these exact lows. It's right at $50. So I think that $50 is a fair level. That was not a very good line. So let's say that we have support right here. Okay, right around that high 49, $50 level, can oil get the drift? Can we drift up to $50? Absolutely. Do we then establish resistance and come back down to support? One thing that oil has been doing recently is we find all sorts of really good range cycles in oil, right? So we go from this, $60 to $75 area. We go from $65 to $50 area. We have our, obviously kind of our anomaly crash this year, but are we going to see some new territory where we see some ranges on oil? And something tells me between about $50 and $35, oil is going to continue to find some structure to trade in. So as we see some upward mobility or upward momentum still continue on oil, that should help the CAD stay firm and remain strong. Dollar CAD probably drifting, well below 1.30. Look for that to continue lower. Aussie CAD, I'm looking for a dip to the downside. New Zealand CAD, I'm looking for a decent play to the downside. And you can follow EuroCAD and PoundCAD as well. I'm long CAD Swiss, so I do like long oil for right now, which I'm playing that through the currency market, being long the Canadian dollar. Other interesting pairs, the Euro Swiss. I've taken some partial profit on the Euro Swiss. We're right back up towards 108.41. What's going to be a critical level on this Euro Swiss is that we have to break above these highs. Now, 108.40 is a really key level. What I'd like to see is a candle actually closing higher. I'm going to use a rectangle tool here. So if we see a candle closing, take a look at this. There it is. All right. So let me delete this. If we see a candle closing above this level, so we have it right at the highs once again. We have a test last week at 108.70, a retest today around 108.50 and change. If we see a daily candle that can close above, and hopefully we can close above 108.40, 108.50, a bullish candle with a bullish body above that, I would hope can continue up towards these highs, which is around 110. So I'm looking for bullishness to continue on this Euro Swiss as long as we remain above 108.40. Now, this could just as well be rejected here, and this could come back down to this little pocket inefficiency and breakout level around 107.30. So two key levels to watch on the Euro Swiss is if we break and hold above 108.40, can we keep drifting up towards 110? I am long for that reason. If we come back down to 107.30, I'm going to buy again there. I'm going to buy again there. And I'm still looking to stay long towards 110 on this Euro Swiss. But it's the question is, am I going to have to add two levels higher with breakouts, or I'm going to get some pullbacks and dips to buy and still stay long? So I do like this currency pair quite a bit, and hopefully we'll continue to see this one head higher. I'm also long on the dollar Swiss. The dollar's not really getting a ton of love, but we have not broken the lows yet, and I'm wondering, will we get this move up into 93.50? So I do remain long, building some of these small positions off of 9,100, right off of 9,000, trying to get price up to 93.50 on the dollar Swiss. I'm also short New Zealand CAD. A decent little rejection today. I just missed my entry. I had a 9150 short, and it is right here at 9150. My broker, I'll show you my broker platform right here. You can see that I am not filled. So if I scroll down, you see how it says sell limit? This sell limit is 9150, and it's right there at the wick. So I just missed that trade. That must have been, I mean, probably within a fraction of a pip. That has to be like right at 4.9 or something like that. Let me see if I can. 9148.6. So just over 1 pip away, which it's okay. I mean, I've got them there for a reason. Basically, I will be taking a short position if I get filled in these areas and these areas. This is going to be kind of position number 1, position number 2. I'm looking for this to fall back into this blue box that I have drawn on my screen, which is around 8,900. So I still like the New Zealand CAD short. I'm just looking to see, does it find a way to retest and hit those highs at 91.50. But overall, I'm looking for this to drop back into 8,900. Watching for this pocket area, which, by the way, this is a 2019 pocket that was just found. And if that resistance holds, then we could drop back into that. But I was hoping we would, not just test the touch of the pocket here, but actually close this pocket from 2019 and then have trades go back down to this recent level right on that breakout. This is an RBNZ news breakout around 8,900. I'm looking to see if price can drop back down there to balance things out. So I do like that short position on the New Zealand CAD. Aussie CAD, same thing. I just had a robot clear some profits for me for 100 pips. I'm going to continue to watch this one, hopefully work its way back down to support, and we might have some range trading coming on Aussie CAD, so stay range bound in this currency pair. Aussie New Zealand's one of my favorite currency pairs. We're at 104.85. Now, what we're doing on this Aussie New Zealand is we are coming back into some of these really nice breakout levels that happened back in March and April of this year. Once we hit the parity level and we had this huge run to the upside, we're filling some of those big pockets. Now, I'd like to see if we can come back in and fill some of these pockets, that the bulls start gathering some strength and start pushing price back up into 108. Now, that is my first profit target. Okay, if we end up settling into 104, 103, I'm looking at profit target number 1 at 108. Profit target number 2 is going to be all the way up here above 110. And anything higher than that is all gravy. So I will be watching. I don't expect this to be a trade that's going to just happen in a week. This is probably going to take some time. It might continue to drift through the remainder of the holiday, right? It's tomorrow's going to be December. So this might be a trade that goes through December into this area. We start out Q1 of next year finding some lows, and then we work our way back up into 108 and get paid really nicely on that trade. So I do like, now that it's sold off, I had traders that were short here around 107.50, 10800, stayed short on this one, took some nice profits, taking some scalping trades, using some trend systems, and it's doing just fine. But anything around 104, make sure you're protecting. I would not be selling necessarily at the current levels. I would be waiting to kind of, confirm a trend line break, look for some bottoms to form, look for some opportunities to start buying nice and low. And larger time frame would look something like this. If we can form higher lows and we can push up into higher highs, that gets us back into this 2014, 2015 high, which is around 1.14. So if this is nothing else, this is just a lot of consolidation right in here. We're going to build another big pattern here, maybe consolidate a little bit longer, but I would imagine we can still find a way to get to 113, 114 eventually. So I'm not going to necessarily hold on to these positions all the way to 114. What I look at is, can I build a position here, take it back to 108? If I can hold it a little bit longer, maybe hold partial profits back to 110. If it comes back down again, I'll buy it again and take profit and take profit. And I will trade this range as long as possible. If we, let's say we have really nice levels at 104. Cool. I'll use that as a level to buy, and I'll continue to buy just like over here. We had lots of levels around 103, 10400. And just you saw it go up, you saw it go up, you saw it go up. So it just kept happening. So there's a lot of good structure on this Aussie, New Zealand. Anything else that I'm liking here? Aussie dollar, right back up towards range highs. If we see some risk off trading, Aussie dollar is a great opportunity to sell nice and high with a tight stop. So that would be looking to sell, fairly soon, or even at today's high around 7,400. I'd say 50 to 70 pip stop loss above, and look to see how low this one wants to drop. You have really nice support right around that 7,000 handle. So you're looking at about a 50 to 60 pip risk area for a 3 to 400 pip reward area on that Aussie dollar. CAD Swiss is at 6981. I'm looking to see with these lows if we can keep holding these major support levels and get a decent bounce and kind of range trading off of the support levels on CAD Swiss to continue to go higher. CAD Yen is still range bound. Swiss Yen is range bound. Euro Aussie is responding nicely off the lows around 6,100. I know I have some traders that are interested in that trade, that they are buying this one between 6,100 and 6,000, looking to get long. I certainly think that there is some room to the upside if we can break this structure right here. So this might be really choppy, really choppy, really choppy, setting up, and then I think we're going back up towards 65. So keep an eye on this one to buy nice and low around 6,100, 6,000, and look for that Euro Aussie to head back up towards 65. Euro Swiss we already talked about. Euro Pound, give it a moment. Euro Pound's probably going to pull back towards 9,000, maybe 9,100. We'll see if it sets up a lower high. Yen pairs I'm not particularly fond of right now. Euro New Zealand waiting for a trend line to break. It looks like it's close. We're going to look for some confirmation this week in my trading room. Euro dollar, really nice rejection at 2,000. I know traders took that short position right at 1.20. I got filled at 1.1999. So I like that sell trade right at the highs. As long as we're not invalidating 1.20, euro dollar looks great to sell nice and high. And if this does hold the highs, work its way back down, halfway is around 1,800, all the way back down is around 1,600. Nice little profit levels on the euro dollar without having much risk to the upside. Pound pairs, there's a lot of support here around 8,000 on the pound Aussie. I like that level to buy off of 8,000. Pound CAD, I'm going to leave this one alone. Pound Swiss, 1.2080. We had an equal high rejection around 2,200. I'm looking to see if we can still maintain this postured breakout to the upside. Look, this is a great level. I could see Pound Swiss, if we have to come back here first, we could come right back down to the support levels at 1,700 and then pop right back up to 2,200. If we break above 2,200, we should be going to 24 and 2,500, no problem. So watching that pound Swiss really carefully. I hope there's enough Swiss weakness to last where the basket does pretty poorly, right? I'd love to see pound Swiss go up, euro Swiss go up, CAD Swiss go up, dollar Swiss go up, Swiss yen go down, everything. Like against the Swiss, I'd like to see a weaker Swiss franc if that is possible. Technically speaking, it does look pretty solid, so I'm not just making that up. Pound yen, I'll leave that one alone. Pound New Zealand, We're looking for some lows to form on pound New Zealand, basically looking to see where a trend line can break. So I'm not going to rush into this trade. I like a nice clean trend line break first. We can look for some confirmation back on the right-hand side of the trend line, make sure we're getting back above this area and starting to trade that level. 1.90 continues to be a strong level of support that needs to hold for the bulls. Pound dollar, didn't have a chance to sell it off of. I was looking at 3,400 to 3,450. I know some traders were short right around that 3,400 handle. Be careful on this one. We probably have 3,400 to 3,500. That's a really strong level of resistance that should play out pretty nicely without having a lot of risk. So I do like looking for sell opportunities on this pound dollar. Stop area above the kind of obvious resistance here. Make sure price doesn't invalidate that. That's a low risk, high reward type setup. New Zealand CAD, let's see this thing drop all the way to 89. New Zealand Swiss took some profit on that one already. New Zealand Yen, I'm currently long, looking to take some profit at some point. Maybe we just get back to these highs from earlier in the year. New Zealand dollar continues to drift higher. I expect this one to find the 71.25 to 7,200 window. There is a nice actually rebound off the lows. Look at that rebound. This actually happened just here in the last couple of hours. Look at this 1 hour chart. So since starting the video this morning, we have the 10 to 11 and 9 to 10 candles. So we had lows around 29.23. We've already responded about 50 pips off those lows. Now here's the kicker for the dollar CAD. If we close back above 3,000, then we're trying to put in a bottom. If we're closing above 3,000, look for a bottom to form. This dollar CAD's probably going to reverse swing to the upside. If we pull back and find this past support becoming resistance, look for this to stall and we continue to head lower. This is nothing more than a pullback here to balance, but we're going to keep lower highs and see this dollar CAD continue to slide. Dollar Swiss, 90.57, coming in off the lows. The lows right around 90.20. Let's go to the higher time frame. And still holding those lows. Dollar Yen, 104.27. Leave it the heck alone. It's a mess right now. Anything on the 10-year? The TNX is the 10-year note. We're sitting just shy of that 1% level. The TLT is the 20-year note, lots of consolidation. The VXX looking for lows to form. The VIXY looking for lows to form. Gold, silver, cryptocurrencies. We talked about all those this morning. So look, here's what we're watching. We're still very interested in watching to see what happens around the post-election structure here on the SPY. Post-election structure on the DIA. Remember that 30,000 mark for the Dow Jones is roughly 300 on the DIA. The QQQ following the NASDAQ. If we're not getting any major strides above or below those post-election levels, it's going to be very tight trading. Okay, in the currency market, do we have a ton of breakouts in the currency market? Less than 40, less than 50 on the strength meter means that, yes, there's some bottoms, there's some tops, but we're not getting a ton of day-to-day volatility. All right, so it will continue to be business as usual. We will, I think that we have to trade confirmation versus tops and bottoms. In my opinion right now, tops and bottoms during holiday trading are going to be very difficult. All right, I think that at the end of the day, technicals tend to win out, but in lower volume, in a sentiment world right now that everything is driving investments to equities, and that's why you have hedging with cryptocurrencies, hedging with gold, hedging with silver, and then playing risk on trading in equities. That's also why you're seeing strength in the New Zealand dollar, strength in the Aussie, weakness in the dollar, weakness in the euro, the yen. So there's a lot of things. I mean, this year has been pretty much labeled risk on versus risk off. And that theme has been probably the strongest correlation I've seen in the last 10 years, as far as it's so obvious that you're just trading risk on versus risk off. Now, what that also means is that when things are truly risk on, everything is moving and favoring that. When things are truly risk off, everything is moving and favoring that. So, if you want to see what risk off looks like, go back and see what moved back in March. That's what risk off trading looks like. And now it's fast, it's furious. The bears jump out of windows, the bulls climb stairs. Okay. But if we see, new highs in the stock market, I'm cautiously bullish. I don't think it's worth fighting. Okay. I'm not buying puts. I'm long volatility. That's what I want to be right now. So I'm long volatility. I'm trading my currency pairs by a combination of having some nice positions on a work through. I like all my big levels on Euro Swiss, Dollar Swiss, Aussie New Zealand, Aussie CAD, New Zealand CAD. I like those currency pairs. And then I have robots doing a lot of work for me. I have some trend systems running on some of those New Zealand pairs. I have some range bound systems that are working on those low volatility pairs, and just let the Forex robots work themselves in some profits. That does pretty well week to week. I've got some positions. I'm going to get some nice injections of profit. Looking to finish the year strong. and we still have a full month ahead. So end of the day today is the end of the month for November. We will see how the remainder of the month trades. News-wise this week, big news coming out with Friday's non-farm payroll. We have some news out of Australia as well. The RBA statement expected to stay the same. We have Jerome Powell speaking on Tuesday at 10 a.m. That's going to be testifying in front of the Committee on Banking, Housing, and Urban Affairs. Okay, that's the CARES Act. Is that going to be around potentially round two discussion on COVID stimulus? Maybe. I know that the Senate, Congress still has to pass it. Democrats want one thing, like 2.2 trillion. Republicans want something else, like 500 billion. Very different levels that maybe a compromise is not found by the end of the year. We will find out. Vaccine stuff's going to get thrown in here as well. It's going to be a very noisy news month. All right. So just be prepared for like headlines to not make the agreements, but follow the technicals. If these charts are showing us obvious levels, obvious breakouts, follow along. Keep an eye out for cryptocurrencies. You may not even hold anything with cryptocurrencies, but it's certainly interesting to follow along. What happens at $20,000 on Bitcoin? Does it just fall from there? If so, okay, what does that mean? How does the stock market relate to Bitcoin falling? This would probably be labeled as risk on trading. If it's going through 20,000, that is risk appetite. If it's crashing off of 20,000, obviously we've had a great run since 12, 12 to 20,000. That's a huge run. But are we going to give it back? There's a lot of volatility ahead, so just be prepared for that. All right, that's why we have a trading room Tuesday, Wednesday, Thursday. That's why we prepare for this stuff. Holy shnikes, this has been a 40-minute video. I appreciate everyone for watching. A big thumbs up for all of you out there that are participating actively every single week watching these videos, and I appreciate all those likes. Make sure you subscribe to the channel, click the notification bell, and let's have a great week trading, everybody. Looking forward to making some pips and profits with everybody, talking about all the things stocks, forex, cryptos, and talk to you all very soon. Happy trading, lots of profits. Bye-bye.